Good afternoon, welcome to the Business Podcast. I'm Nicky Larkin, I'm Managing Director of Grunge Accountants, and today I'm going to be talking about the increases in national insurance, employers' national insurance, and the national minimum wage. As always, please do ask questions as we go along. Just say hi as well, so I know that this is streaming because I'm on my own today. So it's good to know that I have made the technology work. So please do say hi, ask any questions, and I will endeavour to answer them as we go along. So without further ado, I'm going to get straight into the detail. So what are we talking about today? So we are talking about national minimum wage and also national insurance. So what's actually happening is the national insurance, employers' national insurance, will increase from 13.8% to 15%. This is effective from the 6th of April 2025. In addition, there's going to be a decrease, which in this excuse me, in this instance, the decrease is not a good thing because it's the threshold of when employers' national insurance actually starting to be needed to be paid. That's going to be decreasing from £9,100 to £5,000 per employee. The next area is the national minimum wage. So at the moment, the headline number, £11.44, that's for 21s and over. That's going up to £12.21. There's also a threshold between 18 to 20. That's going from £8.60 to £10. And under 18s and apprentices are going to be going from £6.40 an hour to £7.55. Now, I will be going into detail what this actually means in pound terms shortly for people. So hopefully, it's come out a little bit funny, but hopefully you can see that what I'm showing there is what the actual salary, what the national insurance impact is at the different levels. So if you've got staff at £30,000, essentially the additional amount to pay extra is £865 per employee. And I'm just showed sort of each threshold for for every salary band up to 100,000. So 100,000, that is an additional £1,705.80 per person. So if you're not familiar with national insurance, how it works, with employees' national insurance, there's a lower and higher threshold. So at the higher threshold, that percentage stops and it actually goes down to a much smaller percentage. That's not the same with employers' national insurance. It is 15%, whether you pay somebody £20,000 or £1 million. So obviously that is a very significant increase if you have a high amount of employees and you pay a lot to your employees. It will have significant impacts to you. Sorry, just beforehand, I just had some peanuts and they just stuck in my throat, so apologies. Okay, so the next thing to think about is the national minimum wage impact. So what we're seeing there is so for the 21s and over, essentially they will be getting effectively a £1,500 wage increase from April. So you need to make sure that all of your payroll systems update this and you notify your employees of what you're going to be updating them to. For 18 to 20-year-olds, it's going to be going from 16,770 to 19,500. These calculations are assuming that that they are doing a 37.5-hour week. So obviously, if your company typically only does 30 hours a week, it will be different. Or if you're 40 or 45 hours a week, obviously it needs to be calculated. But for this example, I've used 37.5 hours a week. So 9 a.m. to 5:30 with no paid lunch break. It's just got to take the lunch break. For under 18s and apprentices, again, they're the same levels. So they're increasing from 12,480 to 14,722 if you are paying them at national minimum wage. Now, I appreciate a lot of you probably aren't paying people right on the national minimum wage, but if you are, you need to always increase. If you aren't, but you inadvertently realise that you're going to then sort of come under, so perhaps you're paying somebody £12 an hour, you need to make sure that you do the increase from April. The other thing to think about with national minimum wage is you've got to be super careful if you do any deductions, because they still need to be hitting the amount of hours. So if you put through any deductions for uniforms or something like that, or perhaps you charge your employees for the tea and coffee each week or something like that, you need to make sure that they're still going to hit the national minimum wage even after those adjustments. If it's because they've got unauthorised absence or sickness absence and you don't pay sick pay apart from the SSP, that's a different kettle of fish. So always do make sure, and what's quite useful if you get your payroll advisor or your auditor or your accountant to sort of annually do a little audit of your payroll, just to make sure that it is working properly, and that you haven't got any gremlins in there that could cause you problems later. Okay, so I've got quite a few different mitigations I'm going to go through. There's another page with some more positive things in a moment as well. So first of all, which will help most small employers, is that the employer's allowance is going to be going up from £5,000 to £10,250. So that is essentially, if you notice and you wonder why normally perhaps in your April and May PAYE and NI payments, often it's a little bit lower than the rest of the year, it's probably because your payroll people are putting through the application for the employer's allowance. It's always worth checking to make sure that they are, and if they haven't and you are entitled to it, because there are some exceptions about whether you're entitled, so you do need to go through the checklist. But if you do find that you haven't been claiming it, but you were entitled, you can actually go back up to 4 years and get it back. So that can be quite nice little windfall if somebody has forgotten to tick the box, because it literally is somebody's got to tick a box in the software. So if they've forgotten to do that, which is easily done because it's just like, hidden in the software somewhere, to do make sure that it is there. And if you need help with claiming, the Guardian Accountants team are always very happy to help and point you in the right direction for getting the claims back. We've been auditing all of our clients over the last couple of months. Our new payroll expert, Joe, has been diligently going through all our clients to make sure that they have been claiming correctly. I think most of them have all been absolutely fine and have been claiming appropriately. I know I think she's spotted one so far, where I think it's one that we've taken over from someone else. So we've been able to claim a nice little tidy sum for them. What I do recommend is, as always, I'll be on about planning. So when you're planning your pay rises, do think about, if you normally have a standard 5% increase or something, make sure that you've taken that into account first. So with the national insurance increase, so you may perhaps if you normally do perhaps a 4%, you might think about actually only doing a 3% or similar, to try and offset the mitigation of that increased cost to you. As unfortunately it is a straight increase to your profit and loss account, so it's an increase in your expenses, so will decrease your profit, unless you happen to be one of the small employers that actually is going to still be compensated enough from the increase in the employer's allowance. It's sort of, I think it works out, If you've got sort of 6 or 7 employees averaging about 30k, is on the cusp of not real any changes. If you've got less employees than that with those averages, then you'll actually might even be potentially better off and you actually have a little bit more profit in your pocket. But obviously there's a lot of worried employers out there who do employ a lot of people that it's going to be a huge impact. I was talking to someone this week that it was going to cost their business literally millions of pounds. Fortunately, in their contracts, because service contracts, they were able to pass on that additional cost to their clients because they had a cost plus contract. But often you don't. Often you have fixed price contracts, so you've got to be super careful because you could be really stuck. I know there's a lot of carer companies out there that they're okay if they've got that cost plus, but if they haven't, they could be dead in the water and may have to just either not continue certain contracts or potentially even close if it's not viable. Super. Oh, hi, Nicky Gentle's there. Hello. Hi, Nicky. Thank you for watching. So what else can you be thinking about? Now, decreasing your hours. Now, that is actually surprisingly common because you always think, as an employer, you're often always thinking about, your employees want to get as much money as they can, etc. But actually, a lot of people do want to have a little bit more balance. And so actually, some people may be happy to reduce down from 5 to 4 days or 4 to 3 days and take the hit in the fact that they're working less hours. So you may be able to off some of the increase if some people do want to decrease their hours. Another option is look if there's going to be any voluntary redundancies. Of course, there is a cost to voluntary redundancies as there is to compulsory redundancies. So be very, very careful about that. That's why, for example, when you see banks do voluntary redundancies, you get a lot of people that have been long-term employees taking it, because actually that's a lot of money and they get a very nice tidy sum with the redundancy if they've been working perhaps 20 or 30 years. But you really don't want to, you don't want to be worrying about a few £1,000s extra on your NI, but then spending out tens of thousands on redundancies. So you've got to weigh up the calculations very, very carefully. So please do always, before you take any action of anything, one, check the process to make sure it's legal, how you're doing it. And secondly, really thoroughly calculate the financial consequences. That's financial consequences of cost to the business. Also, whether you actually will have to, do something else, pay for something else, because, there's usually, obviously, if they're made redundant, you can't just replace people because that's against the rules. But you may have to do something else, like pay more overtime to people to cover for the fact that people have gone. Another option is consider outsourcing, offshoring. Obviously, you've still got potentially, if you're going to do a mass exit, you might have to look at some redundancies. If you do it as a gradual, so perhaps when you just don't replace people as they leave, so it's a bit of a softer thing and just tinker and try it, that could be a way, and it's a good way to just try it out. It doesn't work for everybody, but for some people it works really well. So again, just try it out. Not all outsourcers are the same, not all offshore companies are the same. So, really, it's often good to do a little try before you buy and get them to do some little tests. Just be aware that obviously, usually when they're doing the tests, they're probably putting their best people on. So do check that when they're doing the tests, that the people that are doing your test thing for you are the people that are going to be doing the work long term, so that when you sign up a long-term contract, you don't find that the service provision suddenly decreases in quality. A few more positive mitigations. Well, it might not be positive for your clients, but for you, do look at price increases. Do test the market. Professional services fees are just going through the roof at the moment. Some people can't get an auditor for love or money. because there is such a shortage, for example. And I know a lot of tax specialists are just continually upping their fees, and their clients are barely blinking because they just do expect it. And as long as you're giving a good service, and there is some stickability to what you're doing, hopefully that your clients will bear that. And even if you do lose perhaps a few, for example, if you increase by 20% and you lose 10% clients, you're still overall going to be better off. Look at automation. I'm still shocked at how little automation there is in a lot of businesses. And so there is, of course, AI that's and Copilot and various other things that are saving a lot of businesses a lot of time. But even before that, there's still people not using dictation services that that convert dictation to typing, or automatic recording of meetings, recording of transcripts of phone calls or meetings to text, things like that. I just remember, sort of 20 years ago, I would spend ages and ages writing up minutes to board meetings. Literally perhaps a couple hours spending making that meticulous board meeting minutes. Nowadays, you can just record the meeting. If you get a really good app, that it will even set it up into really good formatting and everything for you as well. So there is a lot of things that can just be automated. The other thing is measuring utilization. So looking at, if you've got a lot of staff, what are they doing? I mean, that most people are working away, they're doing something, but are they working on the right things? So looking at timesheets, utilization of what they're actually doing on first, billable work versus admin type tasks. I've been doing a real battle of reducing admin tasks as much as possible in my various professional services practices. A certain amount of admin is always required, but you want to try and make sure that things are being done in the best possible way, and the most efficient way. So really have a look at that. Also improve productivity. Are the right people doing the right job? Are there ways that they can have training to be quicker, or different ways to do it? Perhaps they've done the same process for donkey's years, but actually there's better technology, different ways to do things, different systems. Have a look at what they can do. It's surprising how many businesses still have a lot of disjointed systems where they're actually inputting the same information into multiple systems, and that's just such a waste of time for everybody. Oh, nice comment from Tim, just endorsing one of the points. Great example, Nikki. The dictation technology is excellent these days and saves so much time. Yeah, gone are the days where everybody needs their own secretary or administrator. I mean, I'm very lucky in my Greenwich Accountants team. We've got a fantastic ops team, but they don't do loads of, they do stuff for the whole team, and they do an awful lot more high level stuff of reporting and things directly for clients these days, rather than letters for the accountants and things. Most of the accountants do their own letters and stuff. So improve productivity, so we talked about that, but also think about additional service add-ons. If you, even with all the changes, if you're still not getting the profit now with the additional increases, do look at what else could you do at the same time as an add-on. So actually, there's things that people can offer as an additional service or an additional product, which doesn't then cost anything additional apart from the actual thing. It's like, for example, it's a typical restaurant scenario. Why do you think the waiters are always pushing the teas and coffees and desserts? It's because they want to get the average amount per table up. They will have the same amount of tablecloths to clean. Perhaps, yes, they might have a few more spoons. But, they want to get more margin per table, so they need to be pushing those extras there. Nikki Gentle's got a good thing here. She's saying, first thing to do taking on a bookkeeping client is automating their process. You're absolutely correct, Nikki. There's, one of them still using spreadsheets. Oh, my gosh, I remember when I first set up the practice 18 years ago, can be 18 years now, we had people still filling in red ledgers. There's a lot of automation that can be done now. You don't have to spend hours and hours and hours posting in say purchase invoices. There's some great technology, some automation software such as Dex. There's even some ones that are free. I think HubDoc's free with Xero. There's lots of different ones that you can use that will suck all the information in. So, especially if you're getting purchase invoices in that have got, dozens and dozens of lines, that, if it's small invoices, I normally say, 1 minute per invoice, whatever, if I'm like costing up. But actually, if you've got dozens of lines and analysis on an invoice, you can just get your supplier to send it directly to the software. So normally they'll have a software email address, go straight there, it gets sucked into the system, pulls in the PDF, and also populates it all in the system. Saves so much time for you, and I do recommend that as much as possible. There's the occasional client that might, just not have hardly anything, but they still can use the free versions. Don't have to pay, expensive Dex licenses or anything. We do use Dex, but we use that for the clients that have significant volumes. Okay, so hopefully being able to give you a few ideas today to stop you hopefully thinking a bit more and planning a bit more for April, for that first April bill that you're going to have to pay across to HMRC and to your employees. Because it is going to be for a lot of businesses, it is going to be more money. So do think carefully about your options. Usually most businesses will choose several options and they'll have a different blend that suits them. But also it's really good to start doing calculations now. If you're a Greenwich Accountants client, please do reach out to your payroll administrator or your client manager, and they'd be very happy to do some calculations with you to see what is going to be the cost impact. I know that a lot of the team have already been doing a lot for clients already to be seeing, what is the impact, so that they can do a bit of planning ahead to see how they're going to offset that loss of profit. Okay, if there's any more questions, please do free to ask. Otherwise, I'll just go through what's next on the agenda. So on the 14th of March, it's going to be a succession planning business forecast, and I will be joined by my partner in succession planning, Nigel Elks, and we are going to be talking about your plan post-exit. Everybody is always talking about planning for exit, but actually it's a really good idea as the business owner to seriously think about what do you want to be doing post-exit? What are the things that you should have in place? Because it's a huge culture shock to be super busy thinking about your business 24/7 to being selling your business and having a lot of time on your hands and twiddling your thumbs. So we're going to go through a lot of different things there to whether it's financial things or time-wise or mental health as well, and think about how to plan for that exit properly from the actual business owner's perspective for the post-exit. Hopefully on the 28th of March, I'm going to have one of my SMQ colleagues join us. Just need to confirm which one, and I think it's going to be talking probably about wills and probate, or it could be about commercial. Got so many different things we can talk about. Anyway, thank you so much for today. It's the last day of February. It's not a leap year, so hopefully March will be fabulous for everybody. And any questions, as always, whether it's regarding accounting, business exits, mergers and acquisitions, business finance, anything, just let me know, and I will, if one of our team will be able to help you, I'm sure. Thank you so much for joining us today. Have a wonderful weekend. Cheerio.